Hey everybody, Sabi here, giving you a little different video than usual. Something I've been contemplating for the past few weeks, and probably past month, is the dollar index. I've seen a lot of some YouTubers and commentators that are saying that this is bullish because this has been in an uptrend for, well, since 2009. You have higher highs and higher lows, which I would agree with, um, until recently. It's not looking great here to me until it gets back inside of the range. Which we could draw a box on that and just see where our range is here. And now we've broken below the range, back tested it as resistance. So this is not a bullish chart yet. I mean, locally you have lower lows and lower highs continuing here. This looks like a sell setup with a stop loss right there at parity, basically at the 100. um, until it gets back above 100. So bearish until it gets back above there. But something that I've noticed and I was always cautious of is putting basically the range over here. This looks like an upthrust after distribution. If this is your range and the dollar was going to remain strong, it should have stayed above this range and not broken back into it. And any time that you have any asset, basically any chart, once you see price get acceptance back inside of the trading range that it was in before, you should target the lower liquidity, which would be down at 87, 88 area. I don't know how quickly that goes. It could be immediate, but this looks like a sell setup with a target down there for now. It is in an uptrend on the swing highs and swing lows there. But it's showing a change in behavior here, where it's doing something different. Where you've seen ABCs before in like Elliott wave theory, done here on the dollar, where you have the ABC. It's a common pattern that you'll see in markets, especially foreign exchange markets, where they just want liquidity and they'll go up and down and grab liquidity. This one, though, has extended below the first leg. So that's different. There is a difference there. The shape is different. It's not kind of maintaining its structure. You could argue that this first one over here did make the lower low, grinded it out, and pop back up. Then it would be bullish. So if this does the same thing and it grinds it out here, pops back up above parity, then it's bullish. It's very bullish. That would show a taking of liquidity from the bottom of this range here that it's been trading in. So once it gets acceptance back into that trading range, you should target the highs. But until that happens, it's getting acceptance in here on a weekly candle closing basis. You have lower lows, lower highs, and a lower low here on the swings. And locally, you have the lower lows and lower highs continuing down. And something else I was looking at was the potential cycles of the dollar, which should have a 3-year cycle. So if I take this March 17th of 2008 low and swing to the next low and how it lines up with the cycle lows, every one of them gets a low, gets a low, gets a low. Here we got a low, and this appears to have left translated and broken below the cycle low, leading to potential bearishness for the rest of this cycle. I divert to Camel Finance for his expertise on the cycles. But if these have been upward cycles, you got 1, 2, 3, 4, 5. Here's your cycle number 5. This is the 6th cycle. It could be a bearish cycle. There's potential there, which would bring potentially a bullish cycle starting in January of 2028. So you could have a very bearish dollar through till early 2028. That could be maybe that's the top of like financial markets when the dollar reaches that low and the dollar appears to be collapsing, um, similar to a shit coin, and finds its low somewhere at this liquidity here and bounces back up. Um, After that, I would expect a bounce. I don't know that you'll ever reach parity again because then you're reaching potential lower lows. Your lower high comes in at previous highs here, right at parity. So parity might be done for the foreseeable future, unless if it reclaims it shortly. Also, zooming all the way out, this is a downtrend on the monthly. You have your high, you then had a lower low than the previous low. Lower high came there, lower low. This is where you would expect to find your lower high. It's in proportion with how much lower that is. That's an area where you'd find the lower high. And now we're getting reaction here, potential redistribution, upthrust for liquidity, and then back inside the trading range. I mean, this is a very long time frame, so it's not like tradable, I guess. But it kind of looks like the dollar has completed a move up where you have a move. Let me draw it out for you. Let me draw it out here on a monthly chart. You see the way the legs match here. Match this leg with this leg right here. Pop up, pop up. That completes that move. Then you had your ABC right here. Matches that ABC right there. And they match in size as well. And then one more push up, one more push up. This leg, I think, came a little bit more extended than that, but you could expect that in an upthrust after the distribution phase. So this could have been a big distribution phase. There's your upthrust after distribution. Failure to hold above the range suggests that this is a breakdown and it should be paid attention to. If price was going to, say, reaccumulate, if this was a reaccumulation after a show of strength, you reaccumulate, you shouldn't have broke very much below that. So it's right at a point where if it pops back up, it's bullish and you're good. This is a reaccumulation and this is likely to go this much higher in the future, say 120, 128, 130, and that starts a, on the monthly, it'll start a macro uptrend where you would find a higher low sometime in the future around parity. But of course, it has to show that strength first. Now we'll zoom back into the 1 week chart and compare it with gold and see what's been going on since that DXY has topped. You see gold is bottomed and you had the rise of gold and the decline of the dollar versus other currencies. And then sideways chop in the dollar as gold continued to rise. And since the beginning of 2025, gold has went vertical and the dollar has went down. So this is basically investors are running to gold. The dollar doesn't appear to be a safe haven, and now that it's breaking down, gold is breaking out. And this looks like the dollar can continue its downtrend. Locally, there's just a little ABC right there in a downtrend. This could probably go touch the midline of the range at 95, the midline of the previous range, while gold breaks out to somewhere around 3,800 or something like that before retracing. And then maybe you get a dollar bounce again. But it's looking pretty bearish. Dollar bullish gold. So back to the dollar here. So say this weekly chart does continue to break down. What could it possibly look like until that next cycle low comes in 3 years after September 24, 2024? Somewhere in early 2028, end of 2027. Let's draw some potential patterns out using the current range in expectation of lower liquidity if it does happen. So looking at it right here, having that be a little ABC right there, still in a downtrend, it's possible that this leg down repeats, bringing you down to the bottom of the range. that would be quite abrupt, but it could be what's happening here. So you get a little ABC there. And this leg repeats back down here. Yeah, maybe it would go all the way to the bottom of the range. And if it goes to the bottom of the range, you're looking at this liquidity over here almost certainly before bouncing back up. But that would look really clean like that. And then you can see a repeat of this consolidation here at the lower section of that previous range before ultimately repeating this leg and breaking down, taking that liquidity. And after taking that liquidity, you'd probably have a substantial bounce. Might stop at the midline, continue back down, may get back up to parity, but I'd be cautious there because then you're making a lower low. This is where you would expect a lower high. So previous resistance, it's a trade setup that I'm very familiar with if that does happen. So this could mean that the rest of the year, the dollar goes down. 2026 is choppy. 2027, you drop down into that cycle low, and then you see where it bounces. And then ultimately you create some kind of head and shoulders topping pattern, and any breakdown of the lows, again, you're triggering that head and shoulders pattern, target of, probably 60s, 50s, something like that. That would be death of the dollar if it does indeed happen. And maybe they pay off the all the debt with these devalued dollars that they have sometime like 10 years from now. The dollar would be worthless, or they'd be converting it to a new currency. And as the dollar dies, everything moves into the new currency, whatever that is, that's valued 10 to 1 or 100 to 1, depending on how Weimar Germany we get with the US dollar, if that is indeed the case. But I mean, for me, it's all dependent on what happens here. I think any break of this low, I'm expecting all this liquidity to be taken. So it might be a sharp move down and a quick move up for assets and gold, maybe Bitcoin as well, for playing out a consolidation here. I don't know. Let me know what you guys think. And in the meantime, keep them stops tight. Have a good night.